Welcome to the StockInvest.us weekly report. It's another trading week, and we're here to bring you the latest stock market news and analysis. We'll cover the most significant events in the markets this week and dive into last week's activity. Plus, we'll keep you ahead of the game by analyzing the 3 hottest stocks. Keep in mind, the information we provide is for informational and educational purposes only and should not be taken as financial advice. Always do your own research and consult with a financial advisor before making any investment decision. Don't forget to hit subscribe and share your thoughts on this week's report in the comments. If you found this helpful, give us a like. Your support keeps us bringing you the best reports each week. Let's get started. Last week, U.S. stocks ended higher with the S&P 500 reaching its highest level since early December, as core GDP came in slightly stronger than expected. This boosted investor confidence in a potential soft landing for the economy in 2023. The S&P 500 rose 1.1%, the Dow Jones Industrial Average gained 0.6%, and the NASDAQ Composite advanced 1.8%. The GDP report showed the economy grew at a 2.9% pace to close out 2022, with an above-normal rate for 2 quarters in a row. This was seen as evidence of a strong economy. But some strategists worry the full effects of restrictive policy haven't been reflected yet and predict a market slowdown mid-year. Corporate earnings, including a beat from Tesla, also contributed to the positive market sentiment. Gold prices trading in a tight range today as market anticipates central bank meetings, particularly the Federal Reserve. Spot gold is up 0.2% to $1930. $1.07 per ounce, and U.S. gold futures up 0.1% to $1930.50. Gold benefits when interest rates are low as it reduces opportunity cost of holding bullion. Oil prices fell today, giving up earlier gains as investors await the Fed meeting that may spur market volatility. Brent crude down 0.8% to $85.92 per barrel, and WTI down 0.8% to $79.07 per barrel. Market broadly expects Fed to raise interest rates at least 25 BPs, causing concerns over choking fuel demand growth. This week is set to be busy with central bank policy meetings and top U.S. company earnings reports. The Federal Reserve is expected to slow the pace of interest rate hikes, while the European Central Bank and Bank of England are expected to hike by 50 basis points. The U.S. employment report on Friday and reopening of Chinese markets after the Lunar New Year holiday will also be in focus. The ECB is expected to hike by 50 basis points, with hawkish policies still in play due to stubbornly high core inflation. The BOE is expected to follow suit with its 10th rate hike since December 2021. Apple, Amazon, and Alphabet will report earnings results, with 143 companies in the S&P 500 having already reported this season. Chinese financial markets will reopen after the holiday at a 5-month high. My data on Tuesday is expected to show the impact of China's reopening. Let's switch gears and explore the 3 most talked about stocks on StockInvest.us. The stock analysis is available on the website by searching the ticker name. On Friday, Tesla's stock price rose 11.0% from $160.27 to $177.90, marking the 7th consecutive gain, an unusual trend. Investors are speculating if Tesla's recent global vehicle price cuts were due to demand decline or strategic planning. Despite lower gross and operating margins, Tesla reported a record net earning, showing the plan is working. On the same day, Amazon's stock price rose 3.4% from $99.22 to $102.24, the 4th consecutive gain. Amazon's recent move to increase the free delivery threshold from $35 to $150 starting February 28th and the annual Prime membership price. Lucid's stock price rose 43% from $9 to $12.87, the 4th consecutive gain due to unconfirmed rumors of a potential acquisition. Let's talk about the upcoming Wednesday Fed announcement. The Federal Reserve and investors appear to be in a high-stakes game of chicken, and what Fed Chair Jerome Powell says on Wednesday could determine the outcome. The Fed has been pushing for a rise in the Fed funds rate to above 5% and to maintain that level to control inflation and reach its 2% target. However, money market traders are skeptical and expect the Fed to make cuts by year-end. This has led to a January surge in tech and growth stocks and a rally in Treasury bonds, all influenced by the expectation of a policy shift. To some market observers, investors may be too confident and Powell may attempt to bring them back down to earth by being unambiguously hawkish during his news conference. This means he may focus on the imbalance in the labor market and call for restrictive monetary policy for a prolonged period. If Powell sounds hawkish, we can expect tightening of financial conditions and a rise in Treasury yields, a drop in tech stocks, and a stronger dollar. If not, the tech and Treasury rally is expected to continue and the dollar to weaken. Financial conditions have been a source of frustration for Powell as they are represented by easier credit, lower borrowing costs, and higher stock prices, which contribute to inflation and increased risk-taking. Financial conditions have been easing for 14 consecutive weeks, contributing to a weaker dollar and higher import costs. Closing thoughts: as you seek to make informed investment decisions, consider multiple factors such as a stock's fundamentals, financial health, industry trends, and any other relevant information that may impact its price. Remember, investing involves a significant amount of risk, and it is always wise to consult with a financial advisor. Reach out with any questions or comments. We're here to engage and continue the conversation. Stay tuned for next week's episode as we delve into more analysis and provide further insights. The information presented on StockInvest.us should be used as a reference and not solely relied upon for investment decisions. The use of this information is at your own discretion and risk.